Hello and good evening, everyone. Today's webinar topic is gold as an investor asset class. For this, we have with us Sheila Kulkarni, ma'am, Head of Market Development, specific in investment and institutional investor relationships, India. Sheila Kulkarni, ma'am, joined the World Gold Council in 2016. She has over 20 years of experience in financial services and public policy. Previously, ma'am has worked with Standard Chartered Bank and was responsible for public affairs for South Asia and for building trade corridors between Asia, Africa, and the UK. In the past, ma'am has worked extensively for the British government in the Department for Trade and Industry. Her past experience also includes working for DSP Marilyn Lynch. Now, a short glimpse about NISM. NISM is a public trust established in 2006 by the SEBI, the regulator of the service markets in India. The institution carries out a wide range of capacity building activities at various levels aimed at enhancing the quality standards in security markets. Before beginning the session, I would like to request all the participants to note some important points. First, question will be taken at the end during the Q&A segment. Second, all participants will receive a participation certificate within 3 to 4 working days. And third, the recording of this session will be available on the NISM's YouTube channel. Now I request Sheila ma'am to begin with the session.
Thank you. Thanks for the introduction. Very warm good afternoon to all of you. So my presentation is going to be on gold as an asset class, a strategic asset. But before that, for those of you who haven't heard about the World Gold Council, um, just to take you all through who we are a membership-driven organization. Um, Formed by the world's largest gold mining companies. And we champion the role that gold plays as a strategic asset and also shape the future of a responsible and accessible gold supply chain. We produce a lot of research, data, and insights. One of our flagship reports is called the Gold Demand Trends, which is a quarterly report. And the data, research, and insights that we produced are published on a website called gold.org. Um, all you need is your email. We don't charge anything for accessing this data. Everything is for free. And it's probably the only source of information for anything to do with gold. Even central banks come to us when they want to look at, who's consuming gold and how much. And we also work with policymakers to help them set standards for a perpetual and sustainable gold market. Now, if you look at gold, the amount of gold that is available is scarce, but the financial gold market is fairly large. What do I mean by that? Uh, in terms of above ground stocks, we estimate today the amount of gold that's available all over the world in different forms is about 216 lakh tons. Of course, of this, jewelry constitutes 45% or about 97,000 tons. Bars and coins account for about 22% or 48,000 tons. Central banks um, have about 37,000 tons of gold with them. Uh, Proven reserves, which is reserves that we know are available underground but not yet mined and brought to market, are in the range of 59,000 tons. The other above ground stocks that I've mentioned in my presentation is about 32,000 tons. What is this other component? So gold gets used in a lot of other industrial uses as well. For example, dentistry, a lot of medical devices, a lot of electronic items such as your iPhones, iPads, laptops, all of them have gold. And that usage is also increasingly going up. We estimate that to be in the range of 15% in terms of the above ground stock usage. Now, if you look at gold, we all know it's a global market. Emerging market demand for gold is more than the developed market demand. So, China and India account for about 50% of the world's demand, whereas developed economies such as US, Canada, Europe account for only about 29%. So, the emerging market demand overall is about 71%, majority dominated by India and China. And we'll see how this demand is also evolving. Now, what drives demand? Why do people buy gold? When is it that people find gold attractive? So what we've done is we've done some econometric analysis, and we've seen that the demand can be categorized into two buckets: strategic and tactical. We've seen that periods of economic expansion are very supportive for gold demand in the form of jewelry, technology, and long term savings. Likewise, periods of risk and uncertainty also boost the demand for gold. What is risk and uncertainty? Whether we have seen in the recent past, um, geopolitical risk, the Russia-Ukraine war or the Israel-Hamas crisis, and of course, systemic risks that have been panning out um, you know, in different countries from time to time, or uh, not in the very past, but in 2020 we saw COVID. So these are periods of risk and uncertainty where uh, the investment demand for gold goes up because it's considered a safe haven. When we look at tactical drivers for gold demand, opportunity cost is one of the drivers. Opportunity cost is basically the cost of having one asset class over the other, whether it's through interest rates, which various central banks keep changing, and or it's the cost of having equities versus gold or fixed income products, and so on and so forth. Momentum also drives tactical demand. So people like to take advantage of prices and either buy or sell, depending on where the price is at any given point in time. Now, gold is one of those rare metals or commodities that has a dual nature. It's not just a consumption asset through jewelry, but it's also an investment asset. Having said this, the average annual demand for gold is in the range of 3,128 tons or $240 billion. And the composition of this annual demand is 33% of this demand is from jewelry, 40% is investment demand, 20% demand comes from central banks, and 7% demand is from technology. If you look at Indian demand, we've done an econometric analysis here, and we've seen that the drivers for Indian demand are a little different. What do I mean by that? So the long-term drivers for Indian demand for gold are income. When the income rises by 1%, the demand for gold actually goes up by 0.9%. And similarly, when the prices go up, the demand actually comes down. So 1% rise in price would mean that the demand comes down by 0.4%. In the short term, price of course plays its role, but inflation also has a role to play. So when inflation goes up by 1%, the demand actually rises by 2.7%. And when we have monsoons or rainfall in excess of the long period average, um, we've seen that the demand for gold goes up. Taxes also play an important role. Um, so every time the government increases the customs duty and taxes such as GST on gold, the demand actually goes down. Last year was an outlier. Um, for the first time ever, the government actually reduced the customs duty on gold by 9%, the largest drop ever we've seen, and demand actually went up. So when taxes go down, obviously demand also goes up. Having said this, gold is an integral part of our culture. Right from the time a child is born till a person grows old, there are various occasions to buy gold. There are auspicious days such as Dhanteras and Akshay Tritiya, where it's considered auspicious to buy gold. But also, our weddings are incomplete without gold. It's not just the bride and the groom, but the entire family is buying gold for themselves to wear and to celebrate the occasion. Um, there are also various festivals, right, where people buy gold because um, it's culturally seen as a good thing to buy. Having said this, our annual demand for gold in the past 10 years has been in the range of 750 to 800 tons. Majority of this, as you would see in the chart, is also in the form of jewelry, followed by bars, coins, um, central banks, and increasingly we are seeing ETF demand also grow. So, what is the strategic case for gold? I mean, Indians love gold. We have been buying gold for centuries, and yet, here I am trying to make a strategic case. So, let's see. Um, what happens is the common perception when you look at gold as an investment or an asset class is that it's not really different from other commodities. Um, it's only a tactical hedge, or it only preserves capital, and there are better ways to protect against inflation. So, what is the role of gold in portfolios? And why do we say it's a strategic asset? Let's take a look. So, if you look at gold, any portfolio you would want to have three peculiar characteristics, which is to give you returns, to ensure enough diversification, and to also be a liquid portfolio, which is you should be able to sell an asset class when you need the money without actually having to suffer um, a market where there are no buyers, or where in general the asset class only becomes liquid at certain points in time. So gold actually can enhance a portfolio in all these three ways. And if you look at returns, we've done an analysis ranging from 1 year to 15 years. We've compared it with Indian stocks, government bonds, corporate bonds, and also cash. And we've seen that annually gold gives returns at least on an average in the range of 12 to 14%. Now, if you look at gold and its returns from a historic point of view, we've seen that gold also performs very well in periods of high inflation. Gold has also kept up with money supply. So when governments actually increase money supply and debase currencies, and that reduces your purchasing power, one asset class that keeps up with money supply growth is gold. If you look at volatility, gold is definitely less volatile than many major asset classes, such as emerging market stocks, US stocks, private equity, REITs, or even crude oil. And if you look at diversification, good diversifiers are very hard to find. What you would want a diversifier to do ideally would be to grow, when all other asset classes are growing, but also to protect your portfolio from downside risks when, major asset classes are falling. And gold does exactly that. What do I mean? So when the stock markets do well, gold does well. But when markets fall, gold does better. And we've seen this in various scenarios, that have panned out in the recent past. So whether it was COVID, when stock markets turned extremely volatile and were crashing, one asset class that did well was gold. We've seen this, when there are geopolitical events that have happened, and I'll show these slides subsequently. But in terms of diversification, gold is a good diversifier between Indian stocks and um, in comparison to Indian stocks, simply because it doesn't perform like Indian stocks when Indian stocks fall. Likewise, the correlation between gold and Indian bonds, again, is negative when bond markets are actually crashing. In the past few years, what we've seen is that the correlation between bonds and equities have actually turned positive. So the only asset class that counters this correlation in falling markets is gold. Now, I mentioned, right, the demand for gold goes up when there is risk and uncertainty. We've seen, in a geopolitical event, especially where gold has done well, and we've taken the Gulf War of the early 90s, or the 9/11 bombings, Brexit, Russian invasion, or Israel Hamas, invasion that has happened in the recent past. In all these periods, when stock markets have crashed, uh, gold has actually done well. Likewise, in periods of systemic risk, the one asset class that does well is gold. Here we have taken the mid 90s LTCM crisis, the dot com bubble, recession of 2002, or Brexit, 2018 pullback, COVID, and the pullback, um, after COVID in 2022. In periods of systemic risk and periods following a systemic sell-off, again, gold performs well. So we've taken the same periods after following a systemic sell-off, and we've seen that gold has actually done well. Now, if you look at liquidity, liquidity is a very important aspect when you look at uh, portfolio allocation, because like I said, you would want to be able to sell as much as you want when you need money. And if you look at a comparison of gold versus other asset classes, whether it's government bonds, Indian equities, or even German bonds, um, UST bills, gold is actually a very liquid asset class. The amount of gold that gets traded on a daily basis is over $200 billion. Uh, s- why? Because it's traded globally, right? It's not just um, gold ETFs, but it's also uh, through futures, through the COMEX market or the OTC market as well. So gold is an extremely liquid asset class in comparison to some of the major asset classes. Now, if you look at 2024, gold outperformed most asset classes um, globally, not just in India. India, of course, it was a standout performer, giving returns in over excess of 20%. But if you look at 2025 as well, gold has been, again, a standout performer. And we hope that it continues this trend. But i- it's also important to understand not just the opportunities, but the key risks. And what do I mean by this? See, gold doesn't conform to traditional valuation methodologies. A perceived drawback is that it doesn't really provide any regular income. For example, if you hold equities, you get dividends. If you hold fixed income products, you get interest rates. But gold is actually a great diversifier because it behaves very differently from equities and bonds. And on our website, we have a tool called Quorum. We also have a tool called GRAM, the Gold Return Attribution Model, which allows you to play around with macroeconomic indicators and enables you to arrive at your own outlook for gold. This is one of those rare tools that are available today in the world, which allows you to assess your and arrive at your own outlook with a combination of macroeconomic factors that you think will pan out in the near term future. So, like I mentioned, you need to understand key risks as well. Sometimes gold has underperformed, but on an average, if you compare it with Indian equities, uh, gold has given comparable returns at much lower levels of volatility. Now, if you look at portfolio impact and optimization, how much gold is good to have in a portfolio? So, what we did was we created a hypothetical portfolio with 70% equities and 30% fixed income products. And we progressively added gold to it, ranging anywhere between 7.5 to 15%. And we saw that the risk adjusted returns of a hypothetical portfolio with gold were much better than without. Gold also reduced the volatility in a portfolio. The reward to risk was better, and the drawdowns was much lower. So, general characteristics are that gold actually um, in a portfolio improves the risk adjusted returns. We also think that going beyond 15% doesn't really improve the returns so much. It brings down the volatility, no doubt, but the returns really don't go up. We are not financial advisors, but this is a general, guidance that we have arrived at basis, the hypothetical portfolio and the returns that we expect with and without gold. Now, how does one invest? Um, when it comes to investing, it's important to understand what is the size of your investment. How often are you going to rebalance your investment, as in buy or sell part of your allocation in your portfolio? What are the operational considerations? Is physical delivery required? Why am I asking this? So, a lot of people actually buy gold from a long term perspective. For example, we know people in India who buy gold for their children's weddings or for education, which is probably 10 years for now, for example. Now, in which case you wouldn't buy jewelry because uh, if it's for weddings, the designs change, the trends change. It doesn't make sense to have jewelry. You are better off buying liquid asset, which is today gold-backed ETF or bars and coins. If you need to actually touch and feel the gold, then of course bars and coins is a good way to get exposure to gold. But you end up paying locker charges or you risk theft if you keep it in your house. Whereas ETFs today give you the advantage of having allocation to gold in a demat form. So, in terms of products that are available in India, which are regulated, are gold ETFs. You have gold savings funds, or you also have multi asset funds. Gold ETFs, by regulations, are backed by 24 karat pure gold. And the issuer of the ETF needs to ensure that their gold is vaulted properly. You have to audit, the gold that is vaulted at least twice a year. And typically, each unit of ETF is equivalent to zero point zero 0.01 gram of gold. So that's the minimum amount of gold that you can buy through the ETF. I don't think there is any other physical product, so you won't get a bar or coin that is zero point zero 0.01 gram, but ETF allows you that exposure. A gold savings fund or fund of fund is a wrapper on an ETF for those investors who don't have a demat account. And you also have a new asset class called multi-asset funds, where by regulation, there has to be a minimum of 10% um, by the fund house in each of the three asset classes, which is equity, debt, and a precious metal like gold. Of course, you can do systematic investment plans through both fund of fund and the multi asset fund route, and you also don't need a demat account for these two categories. Now, if you look at recent performance and outlook, um, gold has been reaching new highs. In 2024, it reached 40 new highs. In 2025, till April, it reached 25 new highs. Uh, we've seen some paring down since April, uh, and honestly, it's hard to say at this point in time where gold will go because it's all subject to the geopolitical and geoeconomic uncertainties that would pan out, and gold reacting to that. But like I said earlier, gold outperformed most asset classes in 2024, and 2025 also it's been a standout performer. We did an analysis to see how fast gold has actually risen. And historically, we've realized that um, on an average, it took about 1,700 days to climb $500 increments. But the latest jump that happened took only about 210 days. So that was the speed at which, gold actually um, reached these new highs. Now, what we do in our publications is produce an outlook for gold. And actually, our mid-year outlook will be out next week. But for 2025, the outlook that was published at the beginning of the year and every quarter that we publish an outlook through our gold demand trend report, we think that investment demand will continue to hold simply because of the risk of stagflation, the geopolitical risks that are going on, and a bond equity correlation, which spell a positive environment for gold from an investment perspective. Fabrication or jewelry demand, we think, could be lower because what happens is consumers don't buy as much when prices go up. They have budgetary constraints, so either they buy lower quantities or they go for lower caratages. Central banks, we think will continue to buy. In fact, we've just published a central bank reserve survey, which we do annually. And of the 73 central banks that we surveyed, 95% said that they would continue to buy. Just to give you an example, RBI has been one of the uh, larger buyers over the past few years. Uh, Overall, central banks have been buying about 1,000 tons each for the past 3 years. RBI last year was one of the third largest buyer when it bought about 77 tons. This year, RBI hasn't bought as much. It has bought only about 3 tons overall. So the total holdings of RBI are in the range of 879 tons as on date. Um, Overall, as a composition of forex, uh, it has gone up. It's now 12% of its forex reserves. So RBI's gold holdings account for 12% of its forex reserves. If you look at mine supply, we think it'll stay close to 2024 levels, and recycling uh, could remain uh, relatively resistant to high prices. With that, I end my presentation, and we should be able to take any questions. Thank you so much. I think I can see a few questions here, so I'll take some of these. Um, in the present scenario, investment in gold or silver, which is beneficial for 1 year or more. So, frankly speaking, gold and silver are very different. Silver is more an industrial metal. Its usage in jewelry is very limited, whereas gold has, like I said, a dual nature, right? It's used both for consumption through jewelry and also investment. Whereas silver is not really an investment asset. It's nobody uses silver for investment. So um, and silver will do well when the economy does well. When the economy crashes, silver will also crash. Um, that's my answer to that question. There's another question which says. Uh, so, there are some questions which I'm not going to be able to answer because we are not going to be able to, as an organization, we are not allowed to give an outlook. Um, Also, some questions are relating to companies parking their CSR in a multi-asset fund. I'm not going to be able to share that as well. And if you look at fund performance data, you'll be able to see it off the internet. Um, what percentage of assets can you allocate to gold? Like I said, we are not financial advisors, but we think anywhere between 7.5 to 15% works. But we also think the more volatile assets in your portfolio, the more allocation to gold would be necessary. There's a question on, risk-adjusted return metrics, and is there a threshold beyond which gold starts pulling down returns? Yeah, like I said in my presentation, up to 15% is fine. Beyond that, it will reduce the volatility, but it would not improve your returns. Gold ETF and fund of fund, I just explained. Gold ETF is actually an instrument that is backed by gold. A gold fund of fund is a wrapper which allows those investors without demat accounts to actually buy an ETF. For an ETF, ETFs are traded on the exchange and you need a demat account. You would need a broking account through whom to buy. For a fund of fund, you don't need a demat account. You can approach your mutual fund distributor or you can even buy directly online from the fund house. What is the best way to buy gold, ETF, physical, or gold mutual fund? It would depend on the investor, frankly speaking. Again, I explained this. If there's a wedding in the family, say 2 months from now, you would buy jewelry. But if you're looking at an investment or um, you know, an education that you would need to fund 10 years from now, then it doesn't make sense to buy a jewelry. You would actually buy a gold ETF or bars and coins. Which one is better to buy, physical or gold ETF, or if any other? So this would depend on, your requirements. If you want to touch and feel the gold, then you have the option of buying bars and coins. But remember that you would have to pay locker charges, or you have to, you know, um, manage the risk which is associated with keeping gold in under your mattress at home, because it could be stolen. With an ETF, there is always it's a demat account, right? So you are not really exposing yourself to any risk, and it's a regulated product. So SEBI has mandated that every unit of ETF is backed with gold. Obviously, therefore, you have to the it's the asset manager who is responsible for it, and when it's a regulated product, you will be protected by Investor Protection Fund. What are the major global reasons where both gold and security markets go down? Uh, it's a little tricky in the sense that uh, typically when security markets go down, we have seen gold doing well because either there is a geopolitical event that's happened or there is geo-economic uncertainty. We have seen this, since last November when the new presidency in the US came, there has been a lot of tariff wars, and markets have been reacting very volatile, in a very volatile manner. So in these periods, gold has performed well. Um, I am not aware of a major global reason where both in gold and security markets are down, but I could be wrong. Gold ETF or gold mutual fund, which is better? So, if you are able to keep track of prices and price movements, I would say gold ETF. But if you look at gold mutual fund, uh, the fund house is actually buying ETFs, right? I mean, what is a gold mutual fund? It's just a wrapper on the ETF. So the fund house who's running the mutual fund is actually buying the gold ETF themselves. And typically, uh, those fund houses who have their gold ETF also have a gold fund of fund or a gold savings fund. So, if you are not going to be able to track the price, then it is better to invest in a gold fund of fund. And because they are not going to buy 1 and 2 units, they are buying in bulk, so they would know at which price and when to buy. But otherwise, in terms of performance, both of them give you the same performance. Also, if you don't have a demat account, then gold mutual fund works. If you have a demat account, then you could also opt for gold ETFs. How liquid is gold in various forms? Can I sell it quickly at fair market prices? That's a little various forms is something that whichever form you have gold, you can sell it, right? I've shown you the liquidity chart where gold is definitely more liquid than a lot of other asset classes simply because of the amount of gold that gets traded. Yes, you can sell it, but uh, uh, the next question that is there in the same by the same person is, how does digital gold or SGB resolve storage or liquidity concerns? So two things. SGB was not never backed by gold, and if you look at the time period since last February, no new tranches of SGB have been issued because SGB was a fantastic product. It gave you a 2.5% coupon plus tax-free returns if you held till maturity. But it became very expensive for the government because it was a completely open exposure that they took without actually hedging, these bonds with physical gold. So since last year, we haven't seen any new tranches. What has happened is in terms of storage and liquidity, I don't think that is an issue because it's a bond ultimately. But sovereign gold bonds are not liquid. The reason is people want to hold them to maturity. So, whilst these bonds have been listed on the secondary market on any particular day, if somebody were to sell 1 crore worth of bonds, it would be impossible. So, liquidity of SGBs is not that great. Digital gold, I think you should remember, is not a regulated product. So, you're taking a risk on the provider of that digital gold uh, platform. Uh, some of them are very good. I'm sure they back up everything with gold, but it's also possible that mm, some of them are not that great. So you never know if you're going to lose money because, the guy could do a run on your investment. Why people have sentiment about gold buying as an ornament rather than an asset? So it's a very good question. Traditionally in India, bank accounts were not very prevalent. Financial literacy, I would still say, is not really as high as it needs to be. But Indians are very clever. They know that gold has, um, uh, you know, uh, a long history. It is one of the oldest asset classes, if I may say. And um, lack of a financial product because ETFs also came into India only in the year 2007. So, how do you get that exposure? And um, the easiest way was to buy an ornament or jewelry. Um, but I think it buying jewelry was a way to get exposure to the asset class. Now that we have, these products like ETFs or fund of funds, obviously, people will and are moving away from, uh, jewelry to investable products. For a layman, please explain the various modes of investing into gold, like physical form in the form of jewelry, coins, golds, bars. So I think, see, if you're looking at jewelry, jewelry is not really investment. It's meant for adornment purposes. because you have to be, for a product to be an asset class or to be an investable product, it needs to be a standard product and it needs to be regulated. Jewelry is not really regulated. And unless you know what you're buying and you're definitely sure about whether it is 22 carat or 24 carat, um, 24 carat is rare, but 22 or 18 carat, um, when you go to sell it, you are never going to get its price, right? Because the jeweler will reduce the making charges, and also, the price transparency is missing. Whereas if you look at ETFs, there's price transparency because they're all traded online. It's on the exchange. Uh, Bars and coins, the making charges is much lower, but again, you are taking a call on the jeweler from whom you buy. So whilst bars and coins are actually investment, so if you look at investment today, what counts as investments is bars, coins, and ETFs, and of course the wrappers. So whether it's a multi-asset fund or a gold savings fund, but jewelry is not investment. Crude oil and REITs show very high volatility. Could you explain how gold's lower volatility can be leveraged in real asset heavy portfolios? Again, you have to look at liquidity, whether other asset classes offer you the same liquidity. So whether you're looking at infra or real estate companies, the liquidity is not going to be as high. And these are, real estate would be a physical investment, right? So if you're looking at returns from that investment, you would know, real estate investments don't give you more than 5% returns at the most. Um, and they're not very liquid. They all go through a cycle. With gold, it's a definitely low volatile asset, but it also gives you returns. And I've shown you what the average returns are over the past few years. I don't have the volatility between gold and silver because we actually don't track silver. So I'm afraid I can't give that. Um, do you see any further demand in gold on technology? Yes, absolutely. Technology-led demand is increasing because the amount of gold that's getting used um, in AI, for example, the servers and the semiconductors, the chips that go in to run these, new age products and concepts like AI are all using gold. So demand is definitely increasing. Is investing in digital gold a reliable option? I would not be able to comment because it's not really a regulated product. So you are taking a risk on the provider. And like I said, there are some good providers, but there could be, one uh, bad apple there that could change things. How does US dollar affect gold prices and why? So see, today there is only reserve currency is US dollar. And if you're looking at India, when you actually look at gold prices, it's a derived price, right? So it's the price of um, US dollar to INR and then the added taxes and duties. Now, if the uh, dollar demand goes up, um, obviously the price of gold is going to be up in India because the dollar is appreciating. But when the dollar depreciates, then the prices will actually go down. Is gold also prevent any country from restriction of USA? I'm not clear about that question. Um, Sovereign gold bonds, is it investment in gold? So sovereign gold bonds gave you the price of gold. Uh, But remember, they were not backed by physical gold. And like I said, it was a fantastic product because you got the price of gold on maturity plus a 2.5% coupon, all tax free. So it was a great product, but the government since last February has not issued any sovereign gold bonds. So obviously, you can only buy in the secondary market, provided you get the amount that you would like to buy. Is there any tax difference in the form of ETF and physical gold? So ETF, um, now, if you hold for 1 year, it's 12.5%, and mutual funds, if you hold for 2 years, it's 12.5%. Same as bullion. In the past, it is observed that all asset classes are moving in the same direction. What could be the reasons? So, when an economy is doing well, when there are periods of economic expansion, all these asset classes will do well. Simply because there's more consumption in the market, right? And whether it's crude or USD or equity or gold, all of them would do well. Periods of economic expansion generally mean that most asset classes perform well. What is digital gold? So digital gold actually is, there are providers who give you the option through a platform where you can buy small units of gold on their platform for a fee, and then you accumulate it up to it reaches a certain stage and redeem, your investment at a jeweler's end. And the platform decides, which jewelers, because they have empaneled with, a few jewelers, and you actually can redeem your investment um, through them. But like I said, it's not regulated, not yet. Are there any metal substitutes for gold in the future? Because it's a scarce resource and the availability through mining will be zero. See, this is a good question. Why? Because as of now, we don't know of any metal that's a substitute for gold. But remember one thing, gold cannot be destroyed. You store it anyhow and nothing happens. Whereas if you look at metals like silver, they get oxidized. So, however you store it, there is always some loss through storage. And if, the thing is that, availability through mining may or may not be zero. We don't know because as technology changes, there are also new ways to mine gold, and there are always new mining sites that will come up as technology improves. So it is a scarce resource, but it's also a non-destructible resource, right? Gold can be recovered in whichever form it's used. Just to give you an example, uh, Apple alone recovers over 2 tons of gold, 2 or 3 tons of gold through iPhones every year. The global move towards central bank digital currencies, do you think gold will regain strength as a centralized store of value or lose shine? Very hard to say. I mean, frankly, uh, I cannot look that far into the future, but it doesn't seem to be something that will happen too soon. Purity of gold ornaments can be checked anywhere and a certificate issued, yes. So you have a process called hallmarking, which actually tests the purity of gold. There are assayers who will check and who will give you a certificate to tell you how much pure gold is there in the ornament. What has happened is since 2021, hallmarking has become mandatory. So now, whenever you buy jewelry, if the jeweler says it is 22 carat, then it he has to actually ensure that the ornament has alphanumeric code embedded in it, which if you input that code on the Bureau of Indian Standards app, it's called Manak Online, and if he's really done his hallmarking process genuinely, then that alphanumeric code, if you input it on the Manak Online app, you will be able to get its purity, its picture, um, and other details. How is the demand for gold different from that of silver? So actually, we don't track silver demand at all. But like I said, silver is mainly an industrial metal. Its usage in jewelry is very, very small, whereas gold is used both as a consumption through jewelry, but also through technology and, therefore through various industries in even medical devices and industry. New investors today chase quick returns, often ignoring gold. Can gold be rebranded for the new generation as not just an old-fashioned asset? I think that has already started happening, right? Because if you look at um, returns, then today the asset class that has really given fantastic returns is gold. It's not equity. 2024, we didn't see equity giving you great returns, but it was gold that gave you good returns. Even this year, gold has still continued to give you returns. So if the investor is not just following the herd mentality, or doing what everybody else is doing, and they're um, managing their portfolio in a holistic manner, ensuring that various asset classes are represented in the portfolio. um, I think it's a no-brainer that gold actually is an asset class that has been in existence for years, but is also a tested asset class. Uh, just like land, is there any chance that government can claim all gold present in the country? I don't think it's something for me to answer. Warlike situations are one of the reasons for value enhancement. Yes. So what happens in a warlike situation is there's a lot of uncertainty in the market, and people don't like uncertainty, so they start divesting from equities, right? And that's why we've seen equity markets crash when there is a war, or because nobody wants to live in a risky environment. Nobody wants to take a chance when the markets are going through choppy phase. um, Gold is a proven asset class. Gold is a safe haven because it has been around for centuries. It doesn't belong to any government, right? Wars are typically between two countries, but gold is a metal that's present all over the world. It doesn't really belong to one country or one economy, and it also therefore doesn't have a counterparty risk. Unlike governments, who where we've seen this even in fixed income markets, right? Governments keep changing interest rates. Uh, with gold, that is not the case. So, that's why people want a safe haven, something that will protect. It's an insurance for your portfolio, in short. And that's why people rush to uh, the yellow metal when there are turbulent times. After 25 years, what will be the effect on the value of gold in response to digital currency? Hard to say, very hard to say. Could you quantify industrial usage? I think I've just quantified it, right? Basically, what we've seen is uh, usage in the semiconductor industry through chips has gone up. Uh, Overall, if you look at technology demand for gold, it has been annually in the range of 80 tons. Um, and it is growing because, as more and more uh, servers that run the AI come into demand, all these servers use chips that have, you know, gold in them. Um, More and more people are using laptops, iPhones, or not just iPhones, but any phone, mobile phone. All of them also have gold. So the industrial demand is definitely, one place to watch out for. So I think most of the questions are over. I don't think we have got any more questions that I haven't already answered.
Yes, thank you so much, ma'am, for your fantastic webinar. Your insights were truly valuable. Once again, thank you so much, ma'am. Thank you so much for your
Thank
time.
you so much again.